I said, I think this is one of the most important points of the presentation, so I'm going to say it one more time. When the income from our investments exceeds our living expenses, we become financially free or have the ability to retire. For example, Brian is a client of ours who's a great example of how easy you can become proficient at drawing an income from the market, even if you don't want to invest a lot to begin with. Brian had some health problems. He needed a way to supplement his income. So he used the options paycheck system and he was able to generate $23,000 in profits, starting with just 6 grand. He said he had 100% winning trades in 10 months, 31 of 31 trades using our basic system. Now, listen, this is not beginner's luck. It was the result of following the system. The system is what helped him get that 100% winning trades and create that $23,000 in profit. Now, the first thing you need to know to take control of your returns, it's a bit of a strategic mindset shift. You're either going to continue to be the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way that you can make consistent income. It allows you to win even when you're wrong. Now, why do you want to be, and we're going to use the gambler and casino analogy, why do you want to be the casino or the house? Well, the house always wins. And number two, the house always wins because they control and they stack probability in their favor. And that's what the options paycheck system does. It stacks odds massively in your favor. So make a note of this. In order to control your returns and results, you need to know how to stack probability in your favor. So the obvious question is, well, how do you do it? Well, the first step is that shift from being the buyer of options to being the seller. Let me explain. Bruce is a great example of that shift from gambling on stocks to being the casino and controlling and stacking probability in his favor. He said prior to working with us, he had mainly taken stock tips from brokers. Bruce focused on our SPX income system, which is our basic trading system. He said he's not the most technical person in the world. But in the time he's been working with us, he's grown his trading account from $100 to $497,000 in 3.5 years. He's achieving a 74% win percentage simply by following the rules of the options paycheck system. And the whole system takes him around 15 minutes a day. So let me show you how this works. Here's an example of a typical trade you've been taught to make. You find a stock you like, you think it's going to go up, so you either buy shares of it or you buy a call option. Why do you buy a call option? Well, because as a new options trader, it's what you've been taught to do. When you think a stock will go up, you buy a call. If you think a stock will go down, you buy a put. But what ended up happening a lot of times? Well, the stock doesn't go up, or maybe it doesn't go up enough, and the call that you bought ends up expiring worthless. Has it ever happened to you? Yes. Well, what's the problem that's causing you to lose here? Most people feel their problem is they picked the wrong stock. They got to get better. Maybe they're an option trader and they're like, it was the wrong strike. I didn't give it enough time, or the wrong expiration. But let's talk about the real problem. If you've been losing money or had more losers than winners with other systems, it's not your fault. That's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our options paycheck system teaches you a new way of thinking. You need to be a seller and not a buyer because this is how you get ahead of everyone else. This is how you put probability on your side. And this is how you win even if you're wrong. So let's take a closer look at selling options. As a buyer, a typical trade gives you a 50-50 chance to be a winner because when you buy, the only way you make money is if the stock moves in your direction. So instead of having a buyer's mentality, we're going to have a seller's mentality. So instead of hoping that a stock just goes up, as a seller, you're going to strategically set up your trade using probability. Now, probability will tell you where the stock is not likely to go. So this $203 stock over the next month has a 60% chance of staying above 195. So instead of just needing the stock to go in your direction, you pick that price that says, hey, as long as it doesn't go below here, I can make money. Now think about that. You can pick a price below the current stock price, and as long as the stock stays above it, you make money. If the stock goes up, you make money. If it goes sideways, you make money. The stock can even come down a little bit and you can still make money. So right from the very beginning, probability is in your favor. And we can even in some cases increase that probability even more by choosing lower prices. So now you've got a $190 price in a $204 stock, it's got 70% chance to stay above that level. You can only do this as an option seller. As a seller, you're putting the probability of success in your favor, and this is the definition of an income trade. I define an income trade as one where you can make money even if you are wrong on direction. Bruce, by the way, continues to trade with me every week. In fact, he posted on our private Facebook group a while back. It said, another day of trading on the beach. Got my eyes on AMC and a cold beer. Life's good. Thank you, VectorVest and Ron, for giving us the tools to do what we do from anywhere. That is a great picture of financial freedom. Now, another one of our clients is Mike. He was someone who dabbled with options but said he lost in each trade. Have you ever been there? Can you imagine how frustrating that must be to lose on each of your trades? Well, eventually he stopped trading and he went back to the books. He wanted to learn more about options, but he said he never felt comfortable. He knew what he was doing. He had all this knowledge, but no set criteria in how to use it. So Mike and I worked together. I taught him the options paycheck system, becoming an option seller, and he flipped the switch. After he learned the system, he went out and said he had 17 out of 19 winning trades, the profit of over 12 grand in 4 months. And the key lesson here is that switch from buyer or gambler to that selling concept or the house money turned his situation around. He was even so proud of his success, he sent me his spreadsheet of his trades. Now, take a look. Look at the number of winners versus losers. A lot more winning, obviously. And look at the days to close. 7, 5, 4, 2, 7, 7, 10. One thing I want you to understand is this is not like a day trading thing, right? The average trade lasts about 7 to 10 days, and he's pulling in about $1,000 every 7 to 10 days. In fact, if you're like Mike and most of our students, you can start with just trading the SPX. That's an index that tracks the S&P. This involves only one trade per week and has averaged over 4% per month since 2016. The odds are stacked in your favor on these trades. You're not looking for one big home run trade to become a millionaire. You're growing your account steadily each year. And that's really the takeaway. Home runs, they look good, they sell things, but singles are what win the games. We're not going to risk a lot. We're going to make a little bit. These singles are what will enable you to never run out of money and be able to do the things you want to do. So you've seen by flipping from the buyer to the seller, you can stack the odds significantly in your favor. Now what we're going to do is we're going to stack the odds even further by understanding and capitalizing on the 3 most common option buyers or gamblers' mistakes. So mistake number 1 is that option buyers simply choose unrealistic strike prices. They choose strikes that are so far away the stock has no chance of hitting it. Let me explain. This is a stock. Let's say you're bullish on the stock. A mistake a lot of option buyers make is that they buy these calls way above the current stock price. Stocks like 216, they buy a 230 call. They are not going to make a lot of money unless the stock hits $230. And there's a very low probability of that happening. Well, why do they do it if the stock has very little chance of going up that high? They do it because they're treating an option like a lottery ticket. I'll throw 50 bucks at it, maybe I make 1,000. Guess what? Most of the time they lose. They're like gamblers. But since there's always going to be those buyers out there who buy those options, you may as well be the one who sells it to them. You're selling an option that has a low probability of getting hit. And since it has that low probability of the price getting there, that means we have a high probability of winning. And the same goes for puts. There are people who buy puts way down below the market, either as lottery tickets or maybe they own the stock and they just want a cheap insurance policy. Listen, it doesn't matter why they're doing it. The fact is, there will always be buyers out there buying these options. And since there's buyers out there who buy them, you may as well be the one who sells it to them. Selling these options gives you a 60 to 90% probability of success right from the very start of the trade. Now, the second mistake that buyers make is they choose expiration dates that are just too close to the current date. It's like going to the grocery store and seeing a piece of steak on the discount rack. Yes, it's cheap, but unless you cook it in the next 24 hours, it's going to spoil. And the same is true for options. Now, here you're seeing what happens to the price of an option as it gets closer to expiration. So we start around here, 180 days to expiration. And you can see gradually the option's losing its time value, and then something special happens about right here. The decay gets exponential. Over the last 45 days of an option's life, that option is decaying rapidly. Okay? This is terrible for the option buyer. The premium is cheaper because the option's lost most of its time value, but the option is still decaying. What we're going to do is we're going to choose to sell options in that final 45 days to expiration. In fact, I'm going to narrow it down even further. We're going to sell the majority of our options in a 21 to 45 day window. That's the sweet spot. Enough premium to make it worth your while into that time decay area where the time decay benefits you greatly. Now let me show this to you in another way. Take a look at the graph of Home Depot. Most buyers will buy an option maybe a month and a half out, right? But that option expiration is still too close. Notice how the value of the option drops off just because it's getting closer to expiration. This is bad for the option buyer. The stock may go up, but the option value is all decreasing. They're losing anything they gained in time. But listen, you're going to be the option seller. We're going to let that decay work in your favor. Because remember this, there will always be people buying options that have those expiration dates too close. You may as well be the one who sells it to them. Let them be the gambler. You be the casino. We're going to win in the end. Now, the third mistake that buyers make is they simply just pay too much. They buy what's called an overpriced option. So let me show you what I'm talking about here. There's two stocks here. Look at the top. I want you to notice that both stocks are around the same price. They're both about $76 a share. But even though the stocks have the same stock price, look at the difference in their option premium. Over on the left, it's $910. Over on the right, it's $180. Same strike, same expiration, same stock price. Why are they so different? Because the stock on the left has really high volatility. That leads to the option being very, very expensive. Now, buyers who buy those options are simply paying too much. And what's the big deal, right? Who cares? It's only money. Well, watch what happens when a buyer buys an option that is overpriced like that one on the left. Both stocks go up about $8 a share, from 76 to 84. Okay? Think about that. Now watch what happens to the value of the option. The option on the left, that overpriced option, actually lost money. Versus the one on the right had like a 300% gain. Think about that. The buyer got the direction right, but still lost over on the left. Why? Because they ignored volatility. They didn't pay attention to it, and they paid way too much. Now, here's the beauty of this. We as sellers are going to seek out those high volatility expensive options, because when we sell those, we can stack probability even higher, and we reduce our monetary risk tremendously. This is what allows us to be very wrong on the trade and still make money. It's all about stacking probability as much as we can. Now, Bob, another one of our clients, he had one of the most interesting stories I've seen. Prior to working with us, he was making a bunch of the mistakes we talk about, and it cost him dearly. In fact, he ended up either broke or bankrupt 3 times. In his own words, he said he came close to living under a bridge. The options paycheck system helped him turn his situation around in as little as 4 months. He said he learned to turn those liabilities, those mistakes, into strategies that helped him control and stack probability. In 4 months, he grew his account by 71% and had a 79% winning trade percentage. Remember, folks, in order to control your returns and results, you gotta learn how to control and stack probability in your favor. Now, do me a favor, in the chat window, I want you to share with me, for those of you that have traded options or trade options, have you ever made any of those buyer's mistakes? Just type a yes or no in the chat box. I'm going to take a drink of coffee and clear my throat real quick. Much better. Always with the scratchy throat. I see lots of yeses in there. Yes, Jan, Chester, William, Andrew, Donald, Marco, Charles. I see lots of them in there. Yep. I never traded them up. Never traded, all new. Now listen, I like new options traders because I can teach you from the start how to do it right. That's a beautiful thing. I wish somebody would have taught me how to do it right. I got the idea, but I never got taught exactly how to do it. Now listen, we've all made these mistakes. And if you remember from my introductory story, I said I really wasn't a big options guy. That's because I made all these mistakes too. And I just didn't see options as a viable investment for me. Obviously, how things have changed 27 years later. All right. Now that you know you want to be an option seller, I want to look at how we can trade with very little risk. Because when a lot of people hear the word options, especially selling options, they think it's very risky. However, the options paycheck strategy uses a low risk strategy for selling options. This is why it's a core strategy we would teach to all retirees. Now, why is reducing risk so important? Most people who don't use the options paycheck system, they're not preserving their capital. They've had one bad trade wipe out the gains from a bunch of winners. That's not good. Now, if you remember from my slide early on, my average winning trade was 1,000, my average losing trade was 1,000. I don't have massive losses. And the reason why I don't have massive losses is simple. I would never take a trade that would lead to this. You know the risk up front, by the way. You know if you have a trade where you make 1,000 but can lose 20, you just should walk away from that trade. Because if this happens to you, it makes it very hard to recover your losses. But when you do it right with the right system in place, you're going to have a built-in protection plan. You're going to take care of risk management before you even open the trade. When you can confidently select stocks, set up your trade in a way that reduces risk, it allows you to preserve and grow your capital. Because like I said earlier, home runs look good, but those singles are what win the games. Now, one of the most common questions we get asked is, can I trade options from my IRA? Well, I trade some from my IRA. I have a portion of my IRA that's in options. I know a lot of our students do, and I know a lot of our teammates do here. One of our students, John, he grew his IRA over 112% in 1 year using the paycheck system. He said he had tried and struggled with trading for some time before working with us. He learned to follow the system and turned his inconsistent results into that predictable monthly income. He said in 12 months, he enjoyed 85% winning trades and more than double the size of his IRA, spending no more than about 15 minutes per day on his trading. So let's dig a little bit deeper. The options paycheck system makes sure you reduce your risk before you even open the trade. How? First, we choose stocks that are low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are already rising in price. Very similar to what you see here. Then, instead of selling naked, we're going to sell with protection. So let me show you how to do this. Now, if you've ever heard the horror stories of, oh my God, I've been selling options for 8 months and I've been nothing but wins and one trade came in and wiped me all out, this is what you got to learn, okay? A traditional option selling system leaves you with all of this risk, okay? What we're going to do with the options paycheck system is shrink your risk to just that. Now, here's how this works. This is a graph, again, of a typical stock I'd be bullish on. It's a beautiful graph. It's understandable why you want to be bullish on this. Now, traditionally, people would go out and they would buy the stock right here. Maybe you even buy a call, right, and use that stock price as a strike price area. But remember, you're not the buyer anymore. As an option seller in a bullish market, you are going to go underneath the stock and sell a put. Now, when you sell that put, you get paid. You're selling something. You get paid, in this case, $200. If you did this on 10 contracts, you get paid $2,000. Now, isn't that great? I like it. But the problem is, it leaves you with all this risk. How and why? All right, here's the why. First off, let me explain being an option seller. Being an option seller is not like when you sell your car, right? You sell your car, you sign the title over, you cancel your insurance, you're done. When you sell an option, it's like, the best way I could describe it is, it's like when you buy car insurance or house insurance or whatever insurance you buy. You give your insurance company a check, let's say for $2,000. They provide coverage for your assets. If you have any claims during that, let's say 6-month period, they have to fix your asset. I just went through this with a fender bender I was in. Well, not my insurance, the other person's insurance, but whatever. Now, if you don't have any accidents or claims, the insurance company keeps your premium. The option or their insurance contract expires, and you simply re-up it for the next 6 months. Options are similar. An option's a contract. That contract may come with an obligation. In this case, if you sell this put, you may be obligated to buy the stock for $135. Now, if the stock all of a sudden goes down to $100 and you're forced to buy the stock at $135, one bad trade wiped out about 30 of your winners. Not good. What we need to do is we need to limit that risk to just this area. And the way we do it is we buy an insurance policy. So in the same transaction, we are going to sell that 135 put, and we are going to buy, in this case, a 130. That limits your risk to basically $5. So here's what could happen. Let's say something terrible happened. The stock opened up the next day to $100. You're forced to buy the stock for $135. But that option you bought gives you the right to turn around and sell that stock to somebody else for $130. You've lost $5 a share. Now, that insurance policy does cost you something. In this case, we sold the put and received $200. We paid $100 for our insurance. We get to keep a net credit of $100. So if we did this on 10 contracts, we would get paid $1,000, and that becomes the maximum profit on the trade. We can make $1,000. If the option contracts expire with no value, we pocket $1,000. Now, I want to tell you about this. What I just described to you about you have to buy the stock and then you sell the stock later, in 15 plus years of being an option seller, that has never happened to me. I've never actually had to do that. When we do our money management right, you are never going to have to perform a stock transaction. It's just not going to happen, by the way. It's just not going to. In 15 years, it's never happened to me. Now, some people would ask, well, Ron, if it's never happened to you, why do you buy the insurance? Well, you buy the insurance just in case. And there's also many other benefits to buying the insurance. It reduces the amount of money you have to put into the trade. It reduces the options level so beginners can do this type of trade. There's a lot of advantages to buying that insurance, which is why I do it. Now, when we do this trade, again, think about our results here. As long as the stock goes up, we make money. If the stock goes sideways, we still make money. As long as the stock stays above 135, we still make money. And if the stock drops below 135, we will exit this trade and take a proportional loss, just like you saw me. $1,000 win, $1,000 loss. Okay? You're not going to have $1,000 wins and $5,000 losses. That's not good. That's bad trading. It's a bad system. All right? And also think of this. People have this weird thing about options where it's like, well, I can't exit a trade. Yes, you can. Trading an option or trading an option spread is the same thing as owning the stock. You buy this stock, buy 100 shares at 138. Set your stop for 135. If the stock goes below 135, you go to your broker, you sell your stock, and you take your loss. The options contract is the exact same thing. You don't just let them go. We exit these trades and manage these trades just like any other trading opportunity. So I want to put this into a more real-world perspective. I want to set up a couple of trades with you guys, and I want to show you what I did in a couple of trades last year. So I'm going to be giving you some numbers. Now, the first thing I want you to understand is we trade according to market direction. So if the market is bullish, we trade bullish. If the market is bearish, we trade bearish. So in the terms of bullish, let's take a look at PHM. PHM is Pulte Group. It's been a good stock for a long time. Stock is going up, moving from the lower left to the upper right. Let me zoom in here. Pulte, this is back in June, was trading for $76. Now, a lot of people don't know this, but when you go to a broker, when you look at the options have a probability percentage. So when I go look at my option chain in my broker, and I go look at the options that expire within 21 to 45 days, here's what I'll find. I'll find that if this $76 stock stays above 75, it gives me a 56% chance of making money. Why? Because if the stock goes up, I win. Actually, let me do this with red. that's hard to see. If the stock goes up, why is it still black? If the stock goes up, I win. If it goes sideways, I win. But I don't have much of a wiggle room here. I only got down to about right here before I take a loss on that trade. That's why it's only got 56% chance of winning. If I sell B, that's at $73. Now I have a 73% chance of winning, because as long as the stock stays above that, I win. So if the stock goes up, sideways, or now down to here, I have a 73% chance of success. If I look all the way down at $70, okay, all the way down at 70, I have a 91% chance, because now I can make money if it goes up, sideways, or all the way down to here. As long as it stays in this area right here, I win. Now, let me ask you a question without knowing anything else about options trading. If I came to you and said, hey, I can show you a trade that is 56% right, 73% right, or 91% right, which one would you pick? Be honest, type in the chat. Knowing nothing else about probability, nothing about options trading, would you rather be 91% right, 73% right, or 56% right? All right, most of you are saying 91%. That's exactly right. You'd rather be 91% right if you could. Here's the problem. Now, a couple of you guys are saying some other things, but the answer to that question really is 91%. In a perfect world, you'd rather be 91% right. But here's the catch. If you trade at 91% probability, these are those trades where you might make $1,000. But when you lose, you might lose 15,000. Okay? What good is winning 9 out of 10 times if that one loser is going to wipe out all of your gains? It's no good. So some of you guessed 73% right. And for those of you that did, you're absolutely correct. We want to sell options generally in a 60 to 70% probability, because something very special happens at that level. This is where you start seeing a win of 1,000 and maybe a loss of 1,000. Sometimes it might even be a little bit better than that. Something magical happens. You can't be as predictable as 91%, but you can still get a good idea of success. Now, this trade was the one I actually did. I sold a $73 put, and I simultaneously bought a $70 put. It's one transaction. Now again, both are done as one trade, and it's called a bull-put spread. Okay, bull-put spread. I'm selling a $73 put, and I'm buying a $70 put in one transaction. The goal now is for this stock to go up, and what I can do from there, if it does, is I can take my profits. Now, here's an important note. I can't get into all the gory details of how we manage all the trades, but I'm going to give you to this. We do not let the trade expire, okay? We look for a predetermined profit target, typically 50% of what we get paid. So in this trade, based on my profit target, I probably got paid about $1,900, and I profited $876 after my commission, okay, in 3 days. If the market continues to go up, I will place another trade. I close out of my first one at my predetermined profit level, and then I take a second one. We never let these trades expire. We're going to be out of the trade before the expiration. We're never letting these trades go to expiration. Now, when the market is bearish, we do bearish income trades. So a little bit later on, actually this was a little bit before that, sorry, this is Target. Target had a lot of bad press last year, and the stock didn't really do very well. It was in a downtrend, below support. Let's zoom in a little closer. Now, Target's trading at $130.93. I go out to my broker, I look at all of the option strikes, and here's what I see. I see I can sell a 135 and get 64% probability, a 140 at 76, or a 145 at 85%. Now, based on what we talked about, which one would you actually pick, A, B, or C? Knowing that we're trying to look for that, and I'm not trying to give the answer away here, but 60 to 70% probability. Okay? All right, Some of you are saying C, some of you are saying B. Well, here's the answer. You're both right. Anybody that said B or C is technically correct. Okay, here's why. 64% is within our target probability. But in the case of target, options were very overpriced, and we were actually able to get to a 76% probability. Now, I'm going to tell you also, if options are super, super overpriced, in some cases, we could even get to 85% probability. But our goal on average is to get to about 60 to 70%. And in some of these trades, like I said, we could even get higher probabilities. So that trade was done as a bear call spread. So when you're bullish, bull put. When you're bearish, bear call. And I like the names of these. Why? Because they're named pretty much aptly for what they are. When you're bearish, you do this trade. It's a bear trade on calls. I'm selling a $140 call. I'm buying a 145. So the idea for this trade is very simple. If it goes down, I win. If it goes sideways, I win. If it stays below 140, I win. If it goes above 140, I exit the trade. Never keeping it till expiration. It's either going to hit my profit target or it's going to stop me out for a loss, just like any other trade. And on this one, this is more typical, by the way. This took about 7 trading days. The stock really didn't go down a whole heck of a lot. It actually, over the next 7 days, really just went sideways for the most part. But I was still able to make my money. That's the beauty. If the stock doesn't move in your direction, we still have the opportunity to make money. Okay? Now, another client I worked with is Jim. He said prior to working with me, he told me his results were inconsistent and he felt very unsatisfied. He kept thinking there had to be something else out there that was better. You ever felt that way? Like there's something more out there? Jim said he wanted a way to supplement what he was doing and provide more of a regular income with that higher probability of success. So after learning the system of being an option seller, he told me he had 21 winners in a row. That's a good way to start. He's not always going to have winners. He's going to have some losers, obviously. You see 76% return in 8 months, and his average trade was about 8 days. Can you imagine that feeling of being inconsistent to where you rattle off 21 winners? It's possible. It can happen. It's happened to a lot of my clients. That's the beauty of this. Now, you saw Jim. You saw a lot of stories about the clients that I've worked with. You saw my results from last year. Now, let me ask you a question. What if you were able to implement an income system like this? What would that allow you to do personally? Think about it. Give me some examples in the chat window. What would a 3% per month on average system allow you to do? Retire earlier? I know most of you guys are retired. Pay off your bills, pay your kids' bills. I know it's pretty popular right now. I always joke about my son. My son's like a genius. He's like 7, but I always tell my wife, I'm like, he's the kind of kid that's going to live with us forever. He'll be like a scientist for NASA, but he won't be able to go shopping for himself. I love my son. I joke with him all the time, but he's a smart kid. We won't even talk about my daughter. Do more trades, save for the grandkids, help my kids. Live the dream. I love it, Tim. Grow your account faster. Pay for VectorVest. Yes, that's a good sign too. Pay for your tools, right? So we said before that gambling is buying. Selling is about controlling risk and putting the odds of success in your favor. The options paycheck system makes sure you have that guaranteed maximum risk. And it all goes back to whether you'd rather be the gambler or the casino. Because keep in mind, the house always wins in the end. Being an options seller is the way that you can make consistent income each month. It's what allows you to do it safer than just buying and selling stocks with a higher probability of success. It's not a magic indicator. It's just about using math and statistics. That's the beauty. All right, so let's put this together. I want to show you how you can have a bulletproof system, which you can do in as little as 15 minutes a day. Now, my students who've implemented this have told me this is like the most important thing. And why? One of the biggest things people ask me is how much time is it going to take me to do this? And that's a great question. But here's the challenge. There's thousands of stocks out there. You got to find how to pick the right stock, the right strategy, when do you get in, expiration, what price, and what do you do if it goes for you, against you, when do you get out? And when people are focused on that and they see, they're like, this is going to take me forever. It's like a needle in a haystack because there's so much information out there, you don't know what to use. You spend hours putting trades together, or you're going from like guru to guru, Facebook guy to Facebook guy, Instagram to Instagram, right? Ultimately, without a system, you're trading blind. You're like that mouse running through the maze, bumping into wall after wall. You don't know where to go. It's disheartening. It's stressful. But with the right system, you can identify good trades, get reliable income in as little as 15 minutes a day. But you got to have a good system, not just any system, a straight line system. You need a really simple way to know when to place your trades, how to find them, how to set them up, and how to manage them. Let me walk you through the piece of the options paycheck system, the order they go in. Nobody else teaches the entire package like this. Not just option theory, but how to actually apply it to the markets, how to find the stocks, find the markets, all of that stuff. This is like the secret sauce. There's 6 pieces, the top 5 build each other, and then that 6 kind of ties it all together. We start with market direction. And a lot of traders just ignore this and they go out and place their trades. We're going to be placing trades that are either bullish when the market's bullish or bearish when the market's bearish. So you have to have a way to know the market direction. By doing this, you're narrowing your focus. So instead of looking at everything, you're only looking at one of 2 possible scenarios. Our options paycheck system has a timing signal built in that we use to tell us this market direction. After you know the direction of the market, you want to find stocks that are highly likely to move in the same direction. So just trading the stocks you know or things you hear about on TV, that's not really the best choice. You want to find good stocks already in uptrends when the market's rising, bad stocks that are in downtrends when the market is falling. We use 2 things, fundamentals and price trend. We have pre-built searches in VectorVest. We use this instead of digging through all that data the institutions throw at you. Once you got your list of stocks, you want a way to select the best ones for options trading. You already learned a valuable part of that. We look at volatility. We want to focus on selling options with volatility in the upper range. But we don't stop there. To take even more risk out of the trade, we filter out earnings. Earnings are a big question mark, so we don't like to trade around earnings. We also want to make sure our expiration date is set up to take advantage of that time decay. That's what helps me if I'm wrong. Now, you can use lots of tools from a broker. We use a proprietary search tool which finds our option candidates in just a couple of seconds. Now you got to set up your trade. We're going to pick the one that has the highest probability of success that we can find based on the strikes like I showed you in those examples, but at the same time, managing that risk reward. Some trades we can do at 60, some trades we can do at 70, some trades 75. It all goes back to the risk reward of the trade. We never want to put ourselves in a situation where we can make $1,000 but lose 10. Not a good way to do it. Once the trade is selected, you got your trade against. Now you want to know what to do if the trade not only goes for you, but against you. You never want to be sitting in a trade feeling frozen like a deer in the headlights because you don't know what to do. Our paycheck system has rules to take profits at predefined levels, and these can be set up in advance with your broker. And if a trade goes against you, you have an optional adjustment strategy that brings in more income to minimize your losses. We also know exactly when to exit the trades for a loss, and I can set those orders up in advance with my broker as well. So it happens automatically and very unemotional for me. And then the 6th is you want a way to do it quickly. You don't want to be spending all the time and all your days on this. So you need a tool that allows you to do these things, and it should be something you're comfortable using. Some brokers have great tools for this. Thinkorswim has great tools. IB has great tools. Fidelity has pretty good tools. Schwab has pretty good tools. You might find some paid tools to be very effective. I use our proprietary tools from VectorVest called Options Pro. It helps me set these trades up in no time. Speaking of time, we talked earlier about Mike and Jim. They're getting their results in about 15 minutes a day. Well, so is Hugh. He actually told me one of his biggest struggles was finding a system that was efficient and worked because he was retired and didn't have that proper balance between trading and free time. He didn't have that proper work-life balance. Are you like that too? Do you spend too much time on things you don't want to do and not enough time on things you want to? Now that Hugh has learned the options paycheck system of selling options, he said he has more confidence, more free time, and he said he's able to have more fun. He said in his first 43 trades, he had 38 winners, 27 grand in 4 months. That's perfect. Now, let's do this. I want you to take your pen. Do a little exercise with me. Don't write on your monitors, by the way. Write on a notepad. I want you to put a little star next to the part of the system where you're really, really good. So for example, if you have a quick way to find a list of stocks that are likely to go in the direction of the market, put a little star there. If there's an area where something isn't working or you need a little bit of work, put a frowny face there. So for example, if you don't know how to manage and repair a trade, put a frown under trade management. I don't want you to overthink this. Take about 10 seconds I want you to give yourself a star or a frown. Where are you good? Where do you need a little bit of help? 10, 15 seconds. Now, I'm willing to bet maybe 1 in 100 investors will ever know this. So let me ask you this. Share with me in the chat window. What areas do you need to work on? Where are some of your weaknesses that you want to walk out of here today and say, you know what? This is what I got to work on to start getting better and possibly drawing an income in my options account. Or if you don't have an options account, where do you need to start? That's the question. All right. Option selection. All areas. 5 out of 6, Anita. Okay. Donald, you mentioned option selection. I see option selection. Top down. 5 out of 6. All right. Here's the thing. There's no wrong answers here. What we want to do is we want to make sure that you know where your weaknesses are so you can focus on those. Ultimately, I need you to get to the point where you have stars all the way down. Because once you do, you'll be able to generate income every month and do it in less than 15 minutes a day. So listen, I can't know the exact reason why you came to today's webinar, but I'm going to make a few guesses. Maybe you really haven't known what to do and you feel like you've been trading blindly, bumping from one wall into the next. It's left you with inconsistent results. You're making some money, but then you give it all back on your next trade. Just like Jim talked about before he learned the options paycheck system. Maybe you're suffering through loss after loss, and those small losses are killing your portfolio. Maybe the money coming in isn't exceeding the money going out. Ultimately, maybe you're just not where you want to be right now. Now, today, I showed you the secret to fixing that. And it's a secret I've been only 1 in 100 investors will ever know, and now you're one of them. You saw how it's possible to win even if you're wrong. Using the insurance, you can do it with very little risk. It's even less risk than buying and selling stocks. You saw the system to get consistent income every month. And I showed you just a few of the many people who use this system every day so they never have to worry about retirement again. You saw over and over that shift, that secret to generating your consistent income is going from gambler to the casino. You're going to be that one investor out of 100 who knows that secret. That means there's going to be 99 other investors out there who will continue to do things wrong. They're going to be buying options, making all the mistakes that we talked about. We can't stop them from doing it. Okay? There's always going to be those investors out there who will buy options incorrectly. Let them be the gamblers. Because as long as the gamblers are there, you may as well be the casino. Because the house always wins in the end. The paycheck system teaches you how to stack the probability of success in your favor. Just like Brian learned, and Bruce, and Bob, and Jim, and Hugh, and John. So if you're like most people, you're wondering, how do I implement this in my paycheck? How do I get this going as fast as I can? Well, you have a choice. Option number 1 is you can choose to do nothing and stay exactly where you are. And if you already have enough money to retire, you're not really worried about running out of money, then you don't need to do this paycheck, and that's a great place to be. But if you'd like to make some extra income every month, who wouldn't? That leaves you with 2 other options. Option 2, you can do it alone. Try to learn how the option trades work, try to figure out the direction of the market, learn how to analyze, pick the right one, manage it correctly. And listen, if you're willing to work hard, spend hours in front of your computer, and you're willing to learn by trial and error, you might be able to pull it off. Option number 3 is the path of easiness. Let me guide you through it. I'll walk you through each piece of the options paycheck system, and in just a few weeks, you're going to have a simple system to follow that doesn't take a lot of time. So of those 3 options, ask yourself, what's going to be easier for you? There's 2 types of people. Person number 1 is someone who dreams about their financial goals but never takes action or does anything to make it happen. Person number 2 is someone who's serious about their financial future. You're ready to take action when you see an opportunity in front of you. And since you're dedicated to still be with me to this point, I'm willing to bet that you're person number 2, and that makes you the perfect candidate to get started on that first options paycheck. So let me tell you what we put together for you. The options paycheck experience is the most comprehensive program for generating consistent income using option spreads, even if you've never traded an option before. The options paycheck experience is the only implementation program of its kind that teaches the secret to generating consistent income with options. We show you exactly how to find the trades, set them up, and then manage the option spread to generate income, and how you're going to do it safely and consistently, whether the market's bullish or bearish, so you never have that fear of running out of money. After going through the experience, you're going to know exactly how calls and puts work, along with all those fancy terms so you never have to have that fear of options. We're going to give you clear signals telling you whether to place a bullish or a bearish trade and when to place no trade. You're going to be able to quickly identify the stocks that are the best candidates. You're going to be using a rules-based approach, and that frees up a lot of time. We're going to be able to set up income trades that can give you a base 70% success rate. You're going to have a management plan in place prior to placing your trade so you can handle any situation the market throws at you. You're going to be able to confidently enter and exit trades with your broker, whether you've never done options trades before or you've been experienced with this. We're going to implement a system that's going to help you safely and consistently generate income. That way you can live that lifestyle you want without having that fear of running out of money. Now, the course is 8 modules long, and each module builds on the one prior. As you go through the modules, you're getting closer and closer to that end goal, which is a system for consistent income. The first 2 modules are what we call the option income foundation. A lot of people try to build a successful income portfolio, but they base that portfolio on a very weak foundation of knowledge. Listen, we understand what it's like to learn options for the first time. We've been there too. It's why it pays to learn from a team who's gone through this before. If you're inexperienced with options, the outcome you're going to get from Module 1 is you're going to know exactly how calls and puts work. You're going to know exactly what a call and put is. That way you can confidently use them in your trades. You're going to know which terms to pay attention to, which terms to ignore. That way you're not wasting time or getting overburdened with data. In Module 2, you're going to learn to build the spread. You're going to learn how the spread works. You're going to have all the confidence you need to start building these trades with those 2 spreads that we described earlier, the bull put and the bear call. Now that you've constructed that solid foundation of options knowledge, we're going to lay out the step-by-step system to placing income trades that generate your paychecks. Each step along the way stacks probability in your favor and reduces risk. And it all starts with knowing when to trade. Here, you're going to get complete clarity on market trends. So instead of looking at all possible trades, you're going to narrow your focus. You'll know whether to place a bullish trade, a bearish trade, and even when not to trade. After you know the direction of the market, you're going to want to find stocks that are highly likely to move in the same direction. This is going to stack your probability even more. So the outcome here is you're going to know how to quickly find the best stocks and indexes to trade that give you the highest probability. Now that you've got a list of stocks, we're going to narrow it down to the best option candidates. Again, giving you the highest probability for profits. I'm using the word probability a lot. You're going to know that. By using the rules in this module, you're going to make sure you're getting paid top dollar for your trade, and you're going to make it so you can even make money if the stock doesn't go anywhere. We're going to continue to stack, there's this word again, probability, and reduce risk in Module 6 by the way you set up your trade. You're going to be able to make sure you're picking the exact perfect combination of the strike prices and risk reward. Great trades don't happen by accident. They happen because of careful planning and setting them up correctly right from the very start. That's Module 6. Module 7, now that you got your high probability trade picked out and you're ready, we're going to teach you how to have your plan in place. This way you know when to exit the trade, not only for profits, but to exit to minimize losses. You're never going to be frozen like a deer in the headlights again. No matter what the market throws at you, you'll know how to react, and this is going to allow you to trade completely stress-free. And then finally, you've got the trade picked out, the probability works out, you got your management plan mapped out. Now it's time to go to the broker. This module is going to break down the trade execution phase into simple, repeatable steps. You're going to be able to commit this to muscle memory in no time. Plus, we've put everything you need into a checklist, so you never miss a step. So when you're first starting out, it's always comforting having that security blanket, that checklist to make sure you followed all the rules right. And placing trades with your broker can sometimes be intimidating. So in addition to video walkthroughs of several popular brokers, I happen to use Thinkorswim, by the way. I put together click-by-click directions for Thinkorswim from Schwab. Now, before we talk about the low price of the course, I want to make this course as low risk as I can for you. We offer a 100% money-back guarantee. You can go through the entire course, and if you're not satisfied that we taught you how to profit using options, all you got to do is notify us within a week of finishing the course, and you can get your money back. It's no risk. There's only one catch here. All we ask is that you give it your best effort. Come to the classes. We do live classes. We also have recordings. So whether you do live or watch the recordings, I don't care. but you gotta give the course a chance, because we know if you do, you're going to see the results we promise. If you don't do the work, you won't be eligible for a refund. Now, the reason I have such a tight refund policy is I only want to attract people who are excited to jump in. You're excited, you want to do the work, get the results. I want to attract serious investors. In order to do that, when I make a tight policy like this, that's who I attract, people who are serious about getting results. The results, you're going to learn that system that averages 3% per month. That's 36% per year. And remember, it doesn't take a lot of time to do this every week. I got this message from a client of mine who took the course. Ron, I'm writing to thank you for teaching the Options Paycheck course. I took your class last fall and wanted you to know my results for the past 10 months. I keep a journal to document every trade, and so far I've profited on 239 trades out of the 350 I've taken, a 68% winning rate. I've profited over $100,000 in this time. What's more exciting is that since my knowledge and experience have grown in regards to taking really good risk-reward trades, I've profited over $50,000 in the last 6 weeks. My success rate has been 78% over my last 100 trades. I only take trades with a 2 to 1 or better risk reward. I want to thank you again for teaching this very simple but effective system. Now, I want to point something out about Joe. Joe trades a lot more than I do. He said in 10 months he's taken 350 trades. I don't even take 350 trades a year. I take like 150. I average like 3 trades a week. Okay? Joe trades a lot more. There's nothing wrong with that. Make the system work how you want to work. I have traders that do 1 SPX trade a week. Then I have traders like Joe who place many trades. This is a system that scales to you. It's beautiful. Now listen, he made 100 grand. If I told him that I'd give him 2 grand, or he can give me 2 grand, I'd give him 100, do you think he'd take that trade? I think he would. Well, I'm going to make you a good offer too. Now, before I tell you more about it, I want to point something out here. It's important that you understand this is not a get-rich-quick scheme. It's not something where you're going to become a millionaire in 24 hours. This is serious. It requires a little bit of effort on your part. So if you can't commit to it, then don't do it. It's not for you yet. This is for serious people who take their investing seriously and who are willing to put in the time to learn the system. So if you're serious about it, ready to do the work to get results, then the Options Paycheck Experience course is perfect for you. Step-by-step training to go from basics to a full complete income system. Just these modules alone are worth the price of the course. But we got a couple of bonuses for you as well. Bonus 1 is what we call the mastery package. You're going to get module by module mastery sessions. Each week, we'll have 2 mastery sessions, 1 dedicated to each module. That's going to help you master the course material. You're going to go watch the modules via recording on your own. Then we get together 3 times a week. The 2 mastery sessions, and then on Friday, an additional live Q&A. That means you're going to have 3 live lessons each week, giving you plenty of opportunities to ask questions and get help. The mastery package also includes a private dedicated email that goes right to me and my Options Paycheck team that we can bypass the regular VectorVest support. If you don't have it, we're going to give you access to VectorVest and Options Pro software starting in February. That way you can test drive the best tools on the planet. You don't need to use those tools if you don't want to. You can use the system outside that, but we want to have you try our tools to see if you like them. With the mastery package bonus, you're going to have the tools and support you need to master the techniques in the shortest possible time. Now, the second bonus, and this is the best one, I think, we call this implementation month. We want to make sure that you are ready to do these trades. So you're going to get access to my live trading sessions. Where I showed you I made 37% last year, I did it in the classes that you're going to get access to. Okay? You're going to get a month access to this. I'm going to show you how to find these trades, set them up, place them, everything in real time. I'll show you how I manage my existing trades. It's a huge bonus. You're going to see the paycheck system in action. You can even follow the trades along on your own account if you want to. And then I'm going to have office hours twice a week. Together, we're going to continuously walk through the process of doing this in real time. I'm going to use our Options Pro tools. I'm going to use your broker tools. We're going to put this together so you know how to put these trades together and make them work for you. And then if you're wondering or worried about it might be a little bit too much to do all this stock stuff, the SPX paycheck system might be for you. I take the entire course, boil it down to something you can do in as little as 15 minutes a week. It's 1 trade on 1 symbol with 1 rule, 1 profit, 1 stop. It's easy. My teammate Brian taught this to his 14-year-old daughter at the time, and she was able to do the trades. For a lot of my students, this is how they start. It's the only system they use to this day. So, as a recap, with today's offer, you get the Options Paycheck Training Program. That's 8 training modules, videos, checklists, cheat sheets, quizzes, slides, and more. You're going to get VectorVest and Options Pro if you don't already have it for the months of February and March. You're going to get the bonus mastery package, the implementation month, and that SPX paycheck system. All wrapped up, that's like $5,500. But here's what I'm going to do. I'm going to roll up my sleeves with a couple hundred people who are serious about generating income. So if you want to be one of them, together we're going to create that income system in your portfolio, even if you've never done this before. So if you want to join me, have me take you by the hand and install this into your portfolio, then the early bird price instead of $5,000 is $1,295. Now, I got one more bonus for you. Since you spent about an hour with me and I value your time, here's what I want to do for those of you on the live webinar. If you order before the end of the webinar today, so instead of paying $12.95, you can get it for $9.95. Right now, it's like 5:33 Eastern time. You got about an hour, I think, 45 minutes to an hour to take advantage of this. We keep the price going a little bit after the close of the live webinar just to give you some more time. You're going to get the entire course, everything I laid out for $9.95. But you got to go out there, go to optionspaycheck.com, get yourself registered, because once we're done with the live curriculum here, that price goes right back up to $12.95. And listen, I understand $9.95 is still a cost, right? But you got to ask yourself, what's it going to cost you not to do it? How much money are you going to lose out by learning by trial and error? How much profit are you going to miss out on? How much time and energy are you going to spend trying to do this on your own? And then ask yourself, how would things be different if you did it and it worked? You know, there's an old expression that says the best time to plant an oak tree is 20 years ago, so you can be sitting under it now enjoying the shade. You know the second best time is? It's today. It's not too late to begin to prepare yourself for retirement and learn to generate income. This is one of those deciding days. Is it going to be the day that you decide to take action and set yourself up for secure retirement? Or is it going to be the day you look back on where you squandered an amazing opportunity to create that consistent income stream? I hope you don't regret the decision you make. Don't miss this opportunity. Get yourself in. Take advantage of what we've been able to accomplish over the last 15 years. I look forward to working with you and taking you by the hand and teaching you this. So again, go out there to www.optionspaycheck.com and get yourself registered. Remember, that $9.95 price is only available while we're live on the webinar. So if you've never taken the Options Paycheck course before and you want to get the lowest price, this is the time. After the live webinar, it goes back to $12.95. So don't wait. I don't want you to miss out. Just go to optionspaycheck.com, register, and get signed up. Remember, you have a 100% money back guarantee. Now, before I get to the official Q&A, I want to talk a couple of common questions here. You might have heard me before say this is a live webinar and it's also recorded. Well, you can do either one. You can do a combo if you want. It doesn't really matter. Here's the schedule of live sessions. The live sessions start on Tuesday, January 30th, so next week. At 4:30, we're going to have a welcome session. That welcome session is just to show you where all the materials are, what we expect you to do, what you should expect from us, and all that kind of stuff. Then on Wednesday and Thursday, we have our first two mastery modules. Those are at 4:30 p.m. And on Friday, we have the open Q&A. So when you sign up for the course, you're going to get access to all of the materials except for VectorVest and Options Pro. That actually starts the 1st of February. Okay? You're going to get access to everything. So you are going to want to go out there before next Wednesday and at least watch Module 1. Get yourself familiar with it, and then on the 31st, we're going to talk about it. If you can't make these live courses in February, it's not a big deal. We record all of them, and you'll be able to watch the recordings probably within a few hours after we do the sessions. So you can attend live, you can attend via recording. It doesn't make a darn bit of difference. But we want to make sure that we have a plethora of live coursework. So, and I'm going to use that word again, that you have the probability of being able to attend maybe 1 or 2 a week. And if you can't, again, we've got everything else in place where you don't need to. Now, during the month of February, this is your implementation month. We want you to start trading right away, and we're going to help you. We're going to walk you through. On Mondays, I do my SPX trades at 11, and I do stock trades at 2. Okay? Those are all going to be recorded as well if you want to watch those, or you can attend them live with me. I don't care. And then Wednesday and Thursday, we're going to have office hours. Office hours after the market closes at 4:30 on Wednesday, and then Friday during the trading day. The Wednesday class, by the way, for those of you that work and want to do this at night for the next day, I'll show you in that Wednesday class how to set up orders for the next trading day. So you can look for stocks at night and then set your trades up for the very next day. It's kind of cool. Now, another client that took the course is Greg. He said, prior to the course, I struggled with knowing how to protect myself when the market was moving away from me. I feared if I didn't fix it, I'd lose more of my portfolio than I could afford. After taking the Options Paycheck, I feel better prepared to trade and much more confident. In the first month, I made a net of $10,200 for my options income trading with 9 winners and 1 loser. I would absolutely recommend the course. It was very well done, very educational and informative. It's an excellent educational opportunity that I'm thankful I took advantage of. Don't let fear hold you back. You will make more in the first month than you paid to take the course. I was one of the fence sitters who didn't take this course for a long time when I saw it offered, and I lost a lot by not taking the program sooner. I'm very grateful and appreciative of the work that was put into making this trading program available. Now, if you're still on the fence because you don't have a lot of options experience, how much options experience do you actually need? We've polled our prior attendees, and 85% of them said that you can be successful with little to no prior options experience. The probability, I'm saying it again, is on your side if you've never done this before. Just a few more of our course graduates. Cheryl, I've really surpassed my expectations. I don't need the money back guarantee. I tripled my investment. Frank, I've already profited 7,300 before the course. It was a crapshoot. Now I believe in the options trades I'm doing. Cam, I've made back the initial investment so many times over. It's a small part of my portfolio, but it's probably the most profitable. Jake, I finally found a method of making consistent winning trades with a high probability of success. And just a couple more from our most recent students. Neville says, thanks for a wonderful course. Within a short period of time, you've opened our eyes to many things. Your experience, enthusiasm, and your desire to teach comes through easily. You put a lot of thought in the training manual, and I've already paid for the tuition with a few 35 Delta SPX trades. David says the option paycheck experience is by far the best course I've ever attended all my years of VectorVest since '99. You've eliminated my fear of options trading. The manner in which you presented the material is truly outstanding. Ben, the attention I received for all my email questions was above and beyond what I expected. A lot of my questions were demonstrated in class, which made my learning much, much easier. So again, now's the opportunity. Jump out there, optionspaycheck.com, $9.95, get yourself registered. Registration closes at 10 a.m. next Tuesday. The $9.95 price goes away in about 40 minutes or so. So get yourself registered, and I look forward to seeing all of you. So I'm going to bring in, and I don't think Brian's here. John, are you going to do the Q&A with me tonight?
Hey, Ron.
Hey.
Can you hear me?
I can hear you.
It is, yes, Brian had some technical challenges.
Yeah. We could talk about him because he's not here.
Yeah, exactly. All right. First question is from Suman. Earlier, you had shown some performance for the system in a few years. Do you have the 2021s handy?
I do not have the 2021s handy. All I have is 22 and 23. In 2021, I believe that was actually a better year than all of them. I think 21, I'd have to go back and look, but I want to say it was in the 50% range in 21. My worst year was 2018, which I only did like, I think 12 to 15%. That was my worst year. But 20, 21, those were all good years. Those were all good.
Excellent. For those that are wondering about having a VectorVest subscription right now, what would you tell them about what we have on offer as part of them signing up for the course?
Yeah, you're going to get to use VectorVest for 2 months. So you're going to get it through February and March. Not completely 2 months, but through the entire live portion of the course. So I will tell you this, VectorVest, if you're going to trade stocks, there's no better stock platform to find trades. It really, really is that good. I've used a lot of software in my 27 years of trading, and I say VectorVest for stock trades is probably the best you're going to find out there. But you don't necessarily need the software if you don't want to. You don't need Options Pro if you don't want to do it. I'm going to show you in the implementation month how you can use, platforms like Thinkorswim or platforms like Fidelity to kind of do this trading as well. I've only had Options Pro for 8 years. It didn't even exist before that. And I've been trading this system for over 15 years. So it's nice to have those tools, but they are not mandatory if you don't want to use them. But if you do, they're great tools.
Excellent, Ron. A couple of questions in succession. People wondering about broker. Walter's asking about brokers in Australia, and Enrico is asking about, do you have to open a broker account and what kind of minimums you'd be looking at for those brokers?
So yeah, you have to have an account with a broker, of course, an options broker. You can open up an account for as little as $5,000. With that $5,000, you can trade, the SPX, one trade a week. That's it. So you don't have to put a lot of money into this, but be realistic. I'm not going to take that $5,000 account and you're not going to make 5 grand a month. My goal is to help you make 3% per month. That's a realistic number. So you open up a $5,000 account, you make 150, 200 bucks a month, right? As the money comes in, then you can start doubling, kind of like I showed you that graph before. And before you know it, you're talking some serious money. Now, I'll be honest, I don't know brokers in Australia. Um, I know some brokers in Canada like Quest Trade and things like that, but I'm not sure about Australia. But I know Interactive Brokers is pretty big around the world. A lot of clients use that. I know in Canada, a lot of people use Quest Trade. A lot of people use, I can't remember what else they use in Canada. But you're going to want a broker that does options is the key. A broker like Robinhood's not going to really probably work well for this. You're going to want a mainstream broker for sure.
Excellent, Ron. A couple people have asked Zool on the webinar and Matt on YouTube. So hopefully you'll answer in one fell swoop. Number one, do you require a margin account? Number two, do you teach trading on margin? And number three, is the profit percentage you cite a percentage of the required margin? How does margin play into any of this?
Okay. So margin does not play into any of this at all. Is the account marginable? The answer is yes. When you have a trade where you're doing these bull put or bear call credit spreads, the broker considers that a margin account. However, I personally do not use margin. If I have $100,000 in my account, yes, I could technically trade a lot more than that with margin, but I do not. Everything that I do is based on the actual cash value. So when I tell you that 37% on 100 grand, I'm not margining that out and trading like $200,000 with my $100,000 account. At the very most, I'm only risking $10,000 to $12,000 at a time. Everything I do is cash. I do not consider margin in this at all.
Excellent, Ron. For those that are wondering, who I know you talked about the question with the person with the broker in Australia, how is this applicable for those that are not in the United States? How would you approach?
Yeah, I mean the options analytics, if you will, that we teach, they are applicable to any option exchange. So if you're trading Australian markets and Australian options, everything that we teach you really is the same down there. It's the same in Canada. Now, I will tell you that, the US is like the options capital of the world. We have the most widely traded options, the most liquidity in our markets. So we do have a lot of people that trade US markets mainly. But you can trade the Canadian option markets. You can trade the Australia. You can trade the UK. You're not going to have as many opportunities as far as trading opportunities, but it's still doable. It's still done. We have people that live in Australia that do Australian options, the UK, Canada, but they, you can do it. It's as simple as that. The analytics we teach are not specific to any one market.
Excellent, Ron. Another question on brokers. What broker level do you typically need to be able to take these trades?
It depends. Some brokers are level 2, some brokers are level 3. Um, in an IRA, they call it a limited margin account. Like I have an IRA with Fidelity that I trade. That's a limited margin IRA. But mostly it's going to be level 2 or level 3, depending on the broker. The key is you're going to want to tell them that you want to do bull put vertical credit spreads or bear call vertical credit spreads. Or, if you look at a broker, look for vertical spreads and that should get you the level. It's not the highest level. It's usually one of the first 2 option levels that you can have. That's usually the level right after long calls and long puts. So usually level 2 or 3 typically on a broker.
Excellent. Just to clarify, for those that will not be able to attend the sessions live, do they need absolutely to be able to attend the sessions live? How long do they have access to the recordings for those that can't attend live? How does that work, Ron?
Yeah, you don't need to attend the live sessions at all. We do have a lot of live sessions. And again, the reason why we have the live sessions, it's mainly because we want to make sure we have a big footprint out there. So if you need help, there's probably a live session you can get to. But if you can't view the live sessions, it's okay. If you remember, we have a private dedicated email address. Send us an email and say, hey, Ron, can you cover this in tonight's class and I'll watch the recording? We'll do that for you. If you need our help, we can get a hold of you. Just send us an email and we can work with you. But the live curriculum is out there if you want to experience that. But if you don't want to experience it, I would say probably 30% of the people that sign up for the Options Paycheck experience never attend a live session. They just watch the recordings and watch the videos that we already have out there. And that's a perfectly valid way to do it. Now, you will have access to all of those videos and recordings and cheat sheets and quizzes and all that stuff. You're going to get access to that for 1 calendar year. So if you sign up, the course ends at the end of March. You're going to have till March of 2025 to view all the recordings and everything. And the cool thing is you're actually going to see all the updated recordings too. So as we go through the options paycheck for the rest of 2024, you'll get to see some new stuff in there as well as we do more classes.
Excellent, Ron. Question from Carl over here. He's wondering about the performance that you showed,
Mhm.
performance numbers that you showed. Was that on the SPX alone? Or was that a combination of SPX and credit spreads? Or was that just, I'm sorry, stock spreads? Or is this for stocks?
That's a combination of SPX and stocks. The SPX last year was one of my lower years in the SPX. I think I only made like 13% in the SPX, and the other part of it was stock trading. And it kind of goes either way. I put limited risk in the SPX and limited risk in stocks, so it's usually 50-50 at times. Last year was stocks were a little bit better than the S&P, but that was both combined. I always combine my results.
Excellent. I'm just looking through here. Question about those that do not have a lot of options trading experience. What is the advice that you will give to them?
I think that this class is very doable. You know, I've been teaching the options paycheck now for 8 years. And one of the things I did in the last 2 years is I completely redesigned the beginning of the course for people that have never traded options before. So, for those of you that have traded options before and you have a little bit of experience, modules 1 and module 2 might be really boring for you, but I don't like to assume prior knowledge. So, in modules 1 and in modules 2, you're going to learn the basics of what an option is, how they work, what happens when you sell them, what happens when you buy them. And then even in module 2, I put a lot of effort into that. So even if you've never done a trade before, I try to give you the mechanics of how that trade's working. How am I actually making money on an option spread? How am I actually losing money on an option spread? So I basically kind of put that into it, and you can kind of see how it all works. Oh, by the way, for those of you that are wondering about results, I'll show you guys this. I normally don't show you this, but this is my SPX trading for the last 2 years. So in the last 2 years, I've made $42,000 trading the SPX combined in 2023 and 2024. If I take the SPX out of it, it's at 82. So you can kind of see that I'm about 50-50 in stocks and the SPX. That's kind of how my breakdown usually works, right in that 50-50 level. Just to give you an idea. I've only been using this program for 2 years, by the way, so that's the only reason I have only 2023 and 2022 and 2023 in there. I've been using this trade for that. And by the way, those are nothing but vertical spreads. So if I look at my performance, all you're basically going to find is vertical trades. That's it. Bull puts and bear calls. That's it. No other trades go into that dollar amount. I do other trades, by the way. You can kind of see there's a little bit more money in there from those kind of trades. But anyway, those are just bull puts and bear call trades. That's it.
Excellent. Ron, within our, did you already show the VectorVest University for them to see what the course resources look like?
I did not. All right, let's do that real quick. So when you sign up for the program, bear with me a second. Where the heck is it? There we go. When you sign up for the program, you're going to get access to what we call our university. And the university site is where you're going to find all the recordings, all the schedule, everything. So what I would tell you is this. Step number one, when you go to the university site, I want you to go to the course curriculum checklist. And I want you to print this out because this is your checklist to where it's going to guide you towards all the stuff that we want you to do. So module one, we want you to watch the snapshot. 1, 2, 3, 4. We want you to do the review questions, the action items. Just put a check mark on all these things as you're going through them. Okay? Then you go to the next lesson. Write some questions down here. You can save those for the live sessions. You can email them to us, anything you want. But most importantly, I want you to go to the end of this on page number 6, and this is the schedule of live events. Okay? These are when all the live events occur. That way you have the schedule already at your disposal. Okay? Now, underneath that, you're going to see the breakdown of all 8 modules. Module 1, 2, 3, 4, 5, 6, 7, and 8. And the modules are all aligned in the same way. It starts with your recorded lessons. This is the meat of the presentation, the actual modules themselves that you can watch. Every module has an action item. That means we want you to actually start putting this stuff to work, whether it's with Options Pro or your broker. I want you to start using this stuff. We have a review question. So it's a little quiz, anywhere usually from about 10 to 20 questions, just to make sure you're understanding the material. We have the action item walkthrough. So remember I told you there's action items? We actually have a video that will explain to you how to do it. You can actually see in this one, I'm using Thinkorswim, showing you how to do some stuff. Okay? We have FAQs. So frequently asked questions. And then down below, you have your mastery session recording. Now, if you look at the mastery session recording, I happen to be on module 8. You're going to see a date of November 21st, 23. The reason why it says that is that's the mastery session I did on November 21st, 2023. You can actually go in there and watch the prior sessions that we did back in last year. When you get the live ones, like I'll be doing module 8 at the end of February, right? This will update to that new recording, and we'll just update these every time we do a live class. Right below that, we have the bonus module for the SPX trading system. My advice, if you want to trade the SPX, I would concentrate on this 35 delta trade. That's the easiest one in the arsenal and the one that's going to get you successful the quickest. We have all of our Q&A and office hours recordings. So again, if I open up week 1, you're going to see a Q&A from November of last year. Once we do that first Q&A, I think on February 1st, if I'm not mistaken, that'll update to the latest, and then we update all of these other ones. If you want to go back and see the trades I did with my prior class, they're all right here. These are the trades that I did with my prior class, SPX and credit spread trading. So you can watch those. And of course, we'll update those when it comes time for March with your class. Those will all be brand new. For Options Pro, if you want to learn some Options Pro things, there's some tutorials here. You don't have to watch the Options Pro tutorials, by the way. We're going to teach you how to use Options Pro every step along the way if you want to use that. There's also some videos where I try to walk you through, like if you go to Thinkorswim, modeling the trade, setting alerts, OCO orders, profit taking, closing a trade. There's all videos trying to show you how to find a lot of the information that you need. You know, the expirations, the overpriced, underpriced, the ITMs, all that kind of stuff through a bunch of different brokers. And then last but not least, there's webinar links. So we send out a reminder 24 hours before every live webinar. But unfortunately, those emails can go to junk, they can go to clutter. So what we did is we put the links in here for all of the live sessions. So if you sign up and the next Tuesday you're like, oh my God, I know there's a live welcome session. I don't have a link for it. I need to call VectorVest or send an email. You don't. Go into university, go to your schedule and links. There's the link for that class. Just click on it. And there's the link to get into the live session. Tuesday, January 30th, 4:30 to 6 p.m. That'll let you in. And then last but not least, the resources. This is where you're going to find all of the slides. So if you want to print out the slides from module 1 or module 2, the action item worksheets, when we get later into like module 7, you're going to have things like the position sizing worksheet and the checklists and all that kind of stuff. they're all right there. So all of that will get you to where you need to be to make sure that you are learning and ready to put this trade to work. I know it looks intimidating. There's a lot of stuff out there, but we're going to walk you through this week by week by week, and we are going to make sure that you know this material.
Here on quickly.
Yep.
If you wouldn't mind hovering over the broker help
Yeah.
videos, we've had a lot of questions on people who are looking at brokers, looking for brokers, and I was just thinking maybe that's a good place for them to start to think about for the brokers that they could look to have.
Mm-hmm.
I know we cannot recommend any specific broker, but that could be a place for them to start their research if they're looking for a broker and are able to use those.
Agreed. So I personally use Thinkorswim, and then I also have Fidelity. Those are the two brokers that I have. Actually, I have a regular Schwab account too with their Schwab, whatever, but I don't really use that for anything other than covered calls, so I can't really be help with that. But I use Thinkorswim and I use Fidelity for my trading.
I just got that Schwab as well. We'll see how it works.
Yeah, I'm kind of curious.
I don't see anything here unless you can. I think we caught most of those questions.
Yeah, I didn't see anything that jumps out to me.
Yeah, I think we got it.
All right, cool.
Unless we get some stragglers in here.
All right. Well, again, I'll just kind of wrap it up with, remember, all you got to do is go to optionspaycheck.com. Now, we extended the deadline a little bit. You still have about 30 minutes. Usually we keep it to right about 15 minutes after the live material stops, but we extended it a little bit extra today just in case you run into any issues or you want to give us a call. And remember, if you don't want to do this online, you can always give our office a call. The number is 888. What is it, John? You'll have to 658-7638. Is that what it is? I can never remember the phone
That is
number.
correct.
All right. But if you go to just VectorVest.com, by the way, the number's in the upper left-hand corner. I don't ever call our office, so you can see 888-658-7638. And then if you go to that Options Paycheck site and you click on register, if you want to talk to somebody, there will be if you click buy now, there will be a little box that comes up here. And if you want to live chat with somebody too, you can always do that in the live chat. So there's another option for you too if you have any questions. But you got about 30 minutes to take advantage of that $9.95. Okay? All right, John, we pretty much ready to wrap up?
That we are.
All right. Well, thank you, everybody. I appreciate your attendance tonight, and I definitely appreciate the 90 minutes you spent with me. I know that time is valuable, so I hope you got a good preview of what could be done with options with using the right system. So thanks once again, everybody. I appreciate it. I hope to see all of you here next week at the Options Paycheck course live and really help get your 2024 off to a great start of income trading. So thanks once again, and thank you, John, and we'll see you all next time. Have a great evening, everybody.